Palantir just got whacked by Sam Altman of all people. Let's talk about whether or not you need to worry that Palantir can fall a lot more, or whether or not Palantir actually is a buying opportunity here. This episode of Altimetry Authority.
Let's talk earnings and favorite pastime.
Let me just say,
Wall Street
It's
2.5x
because their compensation goes up.
Wall Street's wrong again.
So Joel, AI's poster child, Palantir, did not have a nice end of August, right? I mean, as this headline highlights, right, it actually had a great August for anybody who's trying to short Palantir, which, by the way, there's a lot of people who have been. But everybody, just to contextualize Palantir, this company has been a straight rocket ship for the last year. It's up 1,000%. But a little bit of bad news that came out a few weeks ago caused it to tumble, right? This stock dropped 16%. And really, the whole entire reason why, actually, the funny thing was, had nothing to do with Palantir. What it actually had to do with was Sam Altman, of all people. Sam Altman came out and basically said, there might be a little bit too much heat on AI right now. We might be in a bubble. And everybody said, well, what stock literally is AI incarnate? Palantir. And Palantir tumbled. But Joel, for you and I mean, I think we have a view on this company, which is interesting, but you were talking to somebody else recently who also has a less than favorable view on Palantir and whether or not that drop made sense.
Yeah, I spent most of yesterday with Whitney Tilson. Those of you know Whitney Tilson, he was mayoral candidate of New York recently. He ran a hedge fund. He's been in research for a long time, and he's actually done a lot of the commentary for the Berkshire Hathaway shareholder meetings, and he actually does the pregame commentary, if you will, well known in the Wall Street and whatever. And I asked him if he had one name to stay away from, one company that he'd say, watch out and stay away from this company, despite having great stock momentum over the last year or so. And it was Palantir. And he ran through the quotes. He said, one, they're a little bit overly dependent on government. Two, they're overly dependent on some other areas that aren't going to be as easy to charge with long-term contracts. He brought up that it's trading at 100 times sales, 100 times sales to get to its $300-400 billion valuation, 300 times earnings. So the company makes money, but the problem is, can it grow to the level it's necessary? Can it grow sales by 100 times? You know what I mean? It's just amazing. So that was his pick, and he said he was down on it for a lot of good fundamental reasons. The other thing, Rob, you said it's the AI poster child. It's one of, Fair. Right? I mean, Nvidia is an AI poster child, and there's a number of others, but
Nvidia actually has real earnings, Joel. I mean, to your point, as opposed to if we get into Palantir. By the way, Joel, my favorite thing about Palantir also is I've heard this. I've never talked to somebody who worked at Palantir, but I've heard this statement that people go, when you ask somebody who worked at Palantir for 3 years what Palantir does, they can't explain it to you, and that tells you everything that you need to know about the business. So, anyways, but this is the thing, right, Joel? Is I
heard the same thing I was inside the Pentagon, and this is 2 years ago, and I brought it up and I said, Palantir's doing a tremendous amount of work with you guys, right? And they're so like, yeah. It's like, they're all over the place. I'm like, so that's good. And it was sort of this like, yeah, we're just not exactly sure what they're doing. And I was like, well, that's one heck of a sales force that can get clients to pay big dollars and not even know whether or not it's producing. Anyway, enough. That's scuttlebutt. Either way, Palantir on a as reported ROA, because it's heavily R&D, GAAP accounting does not show this company. So this would say the company is just ridiculous that anyone put a valuation on it of anything. But in reality, it is producing a 30-40% ROA. The issue is that ROA that was 40 to 50% 4 years ago has been falling. All right, it's now at 20%. And we have a return on assets that falls from 45 to 20%. You should not have a stock go up 1,000%, right, in that time period. And yet that's what's happened. Now, Wall Street analysts think that the ROAs, if we take the Wall Street analysts pro forma forecast, the ones that actually have some usefulness, nobody pays attention. Nobody worth their salt pays attention to a buy or a hold, discussion from Wall Street. The target prices are so goofy, nobody pays attention to that. But at 155 a share, what you need this company to do, and this is what matters, is this. This is what's embedded. All right, so you need a 900% return on asset. That means for every $1 billion of assets, they need to produce $9 billion per year in perpetuity. In perpetuity. Do I think that can be done? I don't think so. I think these are grossly, overly lofty expectations, and the company's taking a bit of a hit. That said, these momentum stocks, if they post great earnings over the next 8 quarters, you could still see the stock continue to rise. You could. Simply because when you get to these stages of a bull market and with all the fever behind AI, there's every reason this company could still go up, even with valuations. Eventually, this stock is going to crater. Eventually. Yep. But when is that going to be? You're going to put a short on and wait 2 years? A lot of people in 1998 were shorting just the right companies. But those companies ran up, Julian Robertson and Tiger, and those companies still ran up for another 2.5 years before the shorts worked. And when they worked wonderfully. But who can sit in a short position for 2.5 years? It's very difficult.
And I think, Joel, but the point that you're making is, look, I mean, hey, we're not saying short Palantir because, yes, the short sellers finally made some money on Palantir, in the last 3 weeks after a long time losing a lot of money. But the point is, look, well, Sam Altman's statements, as we've talked about in prior episodes, is about this being a bubble at this point is probably misplaced. Palantir probably is not a horse to back for this just because of the fact that, look, I mean, you look at the valuations are crazy. And just everybody, to put in perspective just how expensive Palantir is and just how wild this is, what we actually did is we went and we looked at all of the companies in the United States of America and their uniform earnings. Because at a $380 billion market cap, what effectively the market is pricing in is that Palantir is going to have, give or take, $20 billion of earnings in the future. Mind you, this company doesn't even have $1 billion of uniform earnings right now. And we said, hey, you know what would be a really interesting exercise? Let's look at all of the companies that actually have $20 billion of earnings. And if you look at them, you've got, basically the 5 or 6 of the Magnificent Seven. And then you've got, Joel, effectively some pure monopolies, in terms of Comcast and Verizon. And then you've got healthcare companies that also effectively have monopolies. And so the idea, everybody, that just to put in perspective Palantir and why, maybe Palantir should have had a little air taken out of the tires as opposed to the rest of the AI boom in the AI market going on right now. This kind of explains it, everybody.
Palantir's, just to make a point that you brushed over, Palantir right now, is getting valuations like the bottom half of this table, but its earnings are like $300 or $400 million.
Yeah.
Right? We're not talking about a company that's generating $2 billion or $5 billion and it's up and coming. It's currently getting valued like the bottom half of this page, and yet, they're getting valuations that are bigger than Johnson & Johnson's. But Johnson & Johnson is doing $32 billion of earnings, and Palantir's doing 300, maybe 400 million of earnings, uniform earnings, right? GAAP accounting doesn't give you good earnings numbers, so I don't want to pounce on the company about their GAAP earnings number, but on a uniform earnings basis, they're not even $1 billion, but their valuation is where J&J is, and J&J's got $33 billion of uniform earnings. So it is a maniacal level of valuation. So look, we believe in AI. We believe the AI boom is here. We believe it's got legs. And we think there's lots of really cool AI and AI enablers to buy into. Mm-hmm. I wouldn't put Palantir on that list.
Right. And so everybody, if you enjoyed that or you disagree with us, give us a comment and tell us what you really think about Palantir and if you think we're right or not. And if there's another company you want us to look at, just like we just did for Palantir, drop it in the comments, throw us a like and a subscribe, and thanks so much. That was this episode of Altimetry Authority.
Thank you, everyone.